So I'll just go through my trades to start with, and then we can just look at the day in a bigger whole. So my first trade of the day was this rejection right here. So if we let me get in replay real quick. We'll just come to here. So I had working off open. I was looking at the bottom of this area and I was kind of just trying to build out somewhat of a structure. Like there really wasn't much at open minus this gap. We filled a lot of that gap right in open. Off the open, we gapped down. So we filled that gap up pretty much off open. So I was just trying to build somewhat looking back and forth to see if there was any type of structure being made, and there really wasn't. So I had a pretty good idea that we were probably going to range for a little bit today. But I did have my highs drawn off. Let's see here. It makes me so mad I deleted that. And I had these highs drawn off here. So let me get these put in a folder so it's not confusing.
Real quick, do you guys consider like a pre-market gap fill whenever it just does like a roundabout basically throughout pre-market?
I'm talking about there was a gap and it did fill. Like you see how it filled, but like I look at more of the S&P futures for pre-market than I do SPY in itself. So it's not as like if we were to just flip over to the minis real quick. Let's see. Yes. So here is open. You see, like we just kind of made that push all the way up and then came back down. And as you can see with the minis, there was somewhat of a uptrend kind of happen. And then we had, wait, that's live now. Where are we? 23rd, right? What's today's date?
Yeah, 23rd.
Yeah, so it's right here. Oh, that's 30-minute chart. I was wondering why I was so wigged out about that. It's like, wait a second. I was just looking at it. I was drawing some pips. Okay. So like if you look in this, like you see how there's the push down overnight, where we made this huge push up. Let's see. We made this huge push up right here. And then here's the push down right here overnight. And then we pushed up back down. So it's not as crazy as, and the question is what spot was I just on? Sorry, I got a lot of tabs open. I was messing with a lot of things today. Okay, right here. So it's like you just see this gap up with SPY pre-market data. Now, if you're on TOS, you have more data than this. It's not as like TradingView because we just get it from like 4:30, I think. Yeah. So we just have a massive gap. So I don't really look too much into it. But I was just coming into open. I was really just looking to see if there was any kind of structure to play off of, and I noticed we were just kind of sitting in that range all pre-market. So the play I hit right out of open was this right here. We were pushing down, and so what I was looking for is to get a bounce right here. So kind of this structure set right here. So to make this move here, push down, bounce, right, and then continue sell off. That's what I was looking for, and I was tracking 2 minutes, the 2 minute. And when we made this open push into the 20, this was my first trade of the day. I bought this push of the 20, and that 50 was my risk. So like when I'm playing this open morning move, it's a very quick play for me. It's a scalp. I'm not really into mess around and like try to make something happen and get like a work down. Like I had no intentions in that trade of just keep breaking down and holding it for a breakdown. It was really a scalp to get like maybe 0.5% on my count, right? And that's the move. It like here to I think here is what I scalped, and it ended up being like 0.5% on my account. So like half my daily goal was done on that one move. And so that's what I bought. I was looking at 2 minute 20, and I had it marked off coming into open. It was like right in here. And so like always draw that line, and I was watching it on the 1 minute. And so when we opened and we made a push, push down, came back up, we opened here and made this kind of flash push. This is exactly, I bought the top of this on the 20 basically. And I was looking for a quick scalp back down to this structure here, like bottom. And so that was my first trade of the day, was this scalp here. And then I had second trade was one I really had a little bit better setup on. That's Ribs. Okay, let's see. Oh, where is this? Didn't I just throw all that into a folder? Oh well. Okay, so if I get out of this, sorry, like today was the first day I stared at a computer all day for work, and like my brain is straight blown up. I don't know what happened. Okay, well, so it's here. Okay, so coming into here, we made this push down, and so I was following structure on the 5-minute chart. So we made this large push down. Dude, I hate how TradingView does this. Okay, here we go. So we made the push down. We bounced off the 200. Made a push up on the 5, and so I was already kind of looking to see if we get a low, push up to a high to come back down, right? And so I was tracking it on a 3-minute right here. Let's get replay. Cut this. So this is the structure I was looking in. I saw we had tweezer tops going on 3-minute right here with this candle. And so when this candle opened and flashed up and pushed back down, we had 2 tweezer tops. So if we look at it on a 1-minute, in the 1-minute, what we're doing here is putting in a double top. So I entered this trade on the open of this candle, and it pushed a little, and I popped it in right here, and my risk was to the top of this double top. And really, I just wanted to get it. I wanted to see if I could get down to structure here, structure low, to go in and set a new low, and that was also like a pre-market low. And I think I had a fib also pulled on this from here to here. Yeah. And so my first scalp, I scalped out a lot of it like at VWAP right here. And then I left half to run. And I'll show you where I got out. Yeah, it was right there on that structure low. I took my second half on the structure low. How often do you wait for candle to close before entering? King, I really not much. I'm not big into. I'm a probability trader, so like I really don't care for confirmation as much. What I'm really looking for is setups to appear and kind of just work itself out through market structure. Like today was a little bit harder, so I was talking to Juan. Like today wasn't a like just market structure kind of trade day for me. I was trading a lot more pivots. So using pivots in the market like this right here, like double top pivot, we failed the top, right? We failed the pivot. So this high here is weak. And is actually about to become a strong lower high, right? And so when we failed that and we got that secondary push and put in a little supply right here, that's like I'm just hopping in. So my style of entering, I enter more on the opening of candles than I do the close of candles. I like to enter on flash pushes. So like if this opens here and we push up, right, and we fail all the way back down, and then we push back up. When this candle opens, it pushes, and you can kind of see a stall on tape. And when I get that stall is usually when I hit it.
Yeah, I'm the same way, man. I watched that an active trader as well. You can see it happen there.
Mm. Yeah, you can see it live. Like you can see the bids and
Yeah,
ask. You
this
can
is the
see the
same
sales just
area.
kind of stop for a second, and that's
Yeah.
where I always just nail it. Um, in confirmation trading, I'm more just trading an area to be honest. I'm not one big into like perfecting entries. Weeble's been pissing me off lately because I'll get in a spot that I think's pretty good and it'll fill me in a really weird spot. And so I've thought about moving to TD, but right now it's just kind of working. Everything's just kind of working. I don't really want to jack with it right now. And I'm not a huge like I said, guys. I go for 1% a day, and once I get near that 1%, I usually just shut it down. So for this trade here, that's really what it was. And if you look at 3-minute, it was clear tweezer tops. I was talking to somebody in chat about it. I can't remember who. It might have been Quigs. But 3-minute top setup. I hit it. I worked it down. The only thing I could have did is probably try to work it lower to the 1272. I don't know if we even got it. Yeah, we didn't, but we got close. but I took a little out on the first VWAP. I probably could have just went ahead and worked all of it to that structure, but I just wanted to lock up a little. And really, guys, today in a day like today, I was trading very small size. Really at the beach, what I found out is I can get to my daily goal with pretty small size. And for me, like today I was trading like 3 to 5 contracts, and that's very small for me. So I usually trade anywhere from 10 to 20 to sometimes 50. And what I noticed at the beach is really I could scalp small size and get to my daily goal pretty easy. And the good news about that is the risk, right? Like if I enter in here and this is my stop and we do push up and break it, like it's not that much on the table that I'm risking. So like if this does go south, right, and I'm down 0.5% maybe on my account, it's not that big of a deal to make that back up in another trade. But if I do this and I'm down 5 or 6% on my account, that's gonna be a tough day. I'm gonna have to work my rear off to try to get that back, and at that point I'm risking again more money, right? So I've recently, I guess, hanging out with Venom for the last year, and Juan and Jake. My life lately is really how can I maintain capital, number one, preserve capital, and put at least amount of risk to get the goal done. And I've just become such a content trader of being content with 1% of my account. And I just know where that's going to take me in a year, 2 years, doing 1%. And so, guys, I really, it's for me, it's probabilities and risk. Like, there's not much TA as much. Like last week at the beach really showed me like I don't need much TA to be a successful trader. Like I read price action and market structure's king, and really just let the market structure do it. And when the play presents itself, being in the right spot at the right time. And so for me in confirmations, like I really don't need much confirmation. It's just like I'll show you here. Like right here, like I have the 3-minute 20, right? That's what I was playing off of, a 2-minute 20 actually, off open. So we pushed in that 20. When we got to it, like I just hit it. Like I don't wait to see if it's going to push any higher, and I think I probably entered it right in here, and there's probably a little time left on that candle. And like this was my cut, the 50. And so if we jumped up in there and started pushing higher, like I'm never going to cut it till we sweep up here because I know we're going to come back to here. If we did this number right here, like if this failed and it just kept going up, like I know I'm probably gonna get this pullback down test. And so I'll wait to cut down here. Sometimes it bites the rear, like right. And if I do that and it sweeps that high, I'm really then playing off this level here. And that's your no man's land. Like you can't go any higher than that. You can't keep playing this coming back down game. But for me, like it hardly ever happens. So it's like when I do enter that and we get to the 50 and I don't see any seller stepping in, like if there's no seller stepping in and nothing is stalling near this 50, I'm getting out. But if I see sellers stepping in and stalling, I'm going to give it a second. I'm not just hopping right out because we're at the 50. So if I see sellers stepping in, I get that stall on tape, like then, okay, I'm going to wait to see the next how we push and see if we get that rejection. Because sometimes you do get here, right? And you push into the 50 instead of the 20. So for me, as long as my thesis is holding and structure still intact, because I got a low here, right? And I got a high here. We broke that low that set that high. So as long as we don't come up here and break this, we're still in a downtrend. So that's kind of just how I play it. I'm just more probabilities. Like for me, it's where can I get in that makes the most sense. That's the cheapest price. And then I just ride it out structure. And so like this was a scalp. It's the first candle of the day. There's so much volatility happening. Sellers were present. And so on the 1-minute chart, that's why I entered that. I hopped right on in and busted it down here. And for me, that's how I traded at the beach. I just kind of got used to it at the beach with small size of getting these quick scalps. And so then this 3-minute was the first like setup on the day that was like, okay, this is a decent setup that's providing itself. The only thing I didn't like about it is we kind of just made a uptrend happen. Let's get to the 5-minute chart. Like if we look at the 5-minute, we had a low, right? We had a high, we set a low, and then we come up and break that high. So we just kind of did put in an uptrend. But on the 5 was tweezer tops. So I was thinking we'd probably see a fail. This like truly isn't an uptrend because if we look, as long as we hold this high, right here, we're technically still in a macro sense not really. It's freaking chops what it is, right? But that's where I entered. I hit that, took some at VWAP just because, like I said, with this level breaking is my kind of opening structure. I was expecting maybe VWAP to bounce this a little, so I took half off VWAP, and then hit some further down at structure low right here. And then I only took one more trade, and it was, let's see. This was probably, let's see. Yeah, it's right here. Yeah. Okay. So on a 1 minute sense, we were in a downtrend. Let me get to replay so we don't lose our place. So we just had double top. We were kind of working our way down on structure. So if we come back, we have a low right here. We break that. We set that new low. That became the top. We broke that low. So then we make another structure low top here. And as you can see, we're just putting in new lows. We break that low. So now we have a new high here. And if you look at this play here, we were pushing up. We got past the. So if we look at this fib here, this is the 5 minute fib that I had pulled from low to high. So if we look at this play on a 5 minute chart, right, we have a high and we have a low. And so that fib was pulled. Why can't I edit that? Yeah. So we were pushing into that on a 5 minute level. If we look at the 1 minute fib for that, we pushed through the 5.0 and the 618. So it was a little deeper retracement. I was thinking we'd get a double top here, but I had that 5 minute fib drawn. If we come to the 2 minute, I do this a lot. I look at the 2 and 3 minute depending on how EMAs are playing with the charts. And today I was looking at 2 minute a lot more than 3. But I had the 20 drawn right here. And so on the 1 minute, if we flip back, when we felled that, right, we came in here kind of putting a double top, fell down, pushed up into it. On the 1 minute chart, I was just waiting for sellers to show up on tape, really. And as soon as they showed up, let's see. Yeah, we get a push down. So I just popped top of this near the 20 on the 2 minute stall. And so that's another prime example of, like I said, about confirmation. Like for me, I knew the 20 was here, I had it marked. And when this candle's pushing into it, like what I'm waiting for is sellers to appear on tape. There's nothing more to that. It's something it's hard to teach. Like tape's one of those things, it takes so much time of just watching price action and watching the tape to kind of see it happen. But my thesis for this trade was that we're in the downtrend. We have a high here. As long as this high holds and stays strong, right, we're going to continue this downtrend. So as we're pushing up into this 20 was my target, basically. I'm just waiting for sellers to appear. And as soon as they appeared on tape, I smacked it. And my first target was structure low. So if we see we pushed down, we hit structure low pretty fast. And then my target 2 was the 1272 on the 5 minute structure. And then we popped that one. So I took half here, took the other half here. And at that point, I called it a day. 3 minute tweezers because it failed to break this 5 minute high. Miki, I don't even think, I'm trying to go back. I had it annotated and I knew exactly why. I don't think it had anything to do with the 5 minute, to be honest. I was playing off this liquidity. I know that because I had this drawn. I think in the chart I posted this morning, I had this liquidity drawn right here. So when we got this 3 minute tweezers, it was into that liquidity area and it was really more just tape. So yeah, but as I am looking at it now, yeah, it's a 5 minute high failure. I just don't think I was looking at that at the time because there wasn't really a set structure. I was still in the mindset of chop. I don't even. Yeah, I had EMAs on because I played it off this, but I was kind of in the chop mindset of once I see failure in candles, I was playing more candle price action than I was structure price action, right? And so for me, like guys, on a day like today, it's just one of those hard things of like when you say tape, do you mean yeah, time and sales level 2. Yeah. Yeah, I like watching live orders come in. And on time and sales, I only see big orders, so 200 and above. So that's when you really like when that starts lighting up, you know they're appearing. You know sellers or buyers are appearing when that starts lighting up. Everything else is just noise that pushes a little bit. When yeah, it's 200 shares. It's on shares. So it's time to sell for actual physical shares being bought. And it's really cool because you can see price like you'll see this pushing up, and that tape, the time it sells is 500. It might be a little too big. I don't. If you're having luck with it, I wouldn't say it's too big. But like for me, like you'll see this push up, and you'll see that like at 200, you'll see small orders come in, and then when you get up to here and you get to this level, like you'll see it start lighting up. Like they'll start flying in, and that's like okay, sellers have appeared to push this, and you'll see this candle happen, and sellers push it down, right? And then when you get this open and it kind of pushes and stalls, that's just when I hit it, and you get a fast work down off of it. You can see it happen.
That's exactly what I watch for. That's why I mean, to be honest, that's why I love trading open. Because I'm not, I'm not there for a long time. I'm just coming
Hmm.
up, and I can get those moves right there with all that volume.
So if we do this, let me just delete all this. I've been back testing some fib stuff. I'll show you. That's pretty cool. All right. So we just look at today's action on a grand scheme. Let's see. So yeah, off bat, like it's not as nasty in hindsight as it felt live. That's what was so frustrating today. Like I got my first two trades and I was so close to my goal. I wasn't really fretting today. I didn't really watch it like crazy because I was just like, you know what? If I find a setup, I'll hit it. But it was just one of those days of like, I felt like all the moves that you can see it, like all the pushes just weren't like, there wasn't a huge impulse move down to a like correction accumulation. It was like everything was so just like choppy moves. And even though it grinded up, it just never felt like it. It didn't feel like we went anywhere. And then I kept looking back every 20 minutes and I'm like, holy cow, we're $1 above where we were. And it's like it happened weirdly. Like it just never went there. And so that's why it wasn't like a trend kind of market structure day to buy pullbacks. But if we do look at it like, we set highs right here. We went down, we set a low. So if we just play off that structure right there, we had a break, this is where I said watch liquidity. But we broke above, came down and set a low. And so if we were to pull this real quick, that pullback was right into the 5. And so this VWAP buy, like that's a legit play. And if you bought it, you had the 11272 and it like hit targets perfectly. And then we had to push back down. And this is the importance of looking at higher time frames. So if like we come back to here, because as you can see on a 5-minute chart, like we had a change of character right here. So if we're just pushing highs and lows, we make a high, break that high, made this the low. We broke that high, so there's a high of day, and made that a low, and then we had a change of character, right? Yeah, I'm about to. And so like for me, I'm a 30-minute trader. So I really care about 30-minute trend and I trade 5-minute structures within that 30-minute trend. And I know people look at me and they're like, well, you're a scalper, like because I'm on the 1 minute 90% of the time. But guys, I've been trading for so long. When I'm looking at the 1 minute, I'm actually seeing 5-minute structure happen. And I'll look at the 1 minute micro within that, but like what structure I'm doing is 5 minute. So that's why I always say like don't get caught in the micro, because 1 minute structure doesn't mean crap to me. Like it does on a change of character, because I know a change of character can mean that it's a 5-minute pullback, and then a break of structure on that means your change of character happened on a 5-minute, which now we're in a 30-minute territory. And so for me, like I trade 1 minute getting entries, but I trade off the 30-minute trend and 5-minute structure base. So like when I'm trading and I'm enter, like if I have a low here, right, and a high up here, and then we coming down, put a low, like my target one is 5-minute structure high, not 1 minute structure high, unless it's a chop day. If it's a chop day, all bets are off of trading structure, right? So if it's chop day, we're going 1 minute. And that's all I care about. And that's why I say, like, if you're trading micro, stay in micro. Don't try to make micro macro. But if we look at this, like, okay, so we had a 5-minute break of structure. Like we had a high, right? You know, we set a high here. We came, that high got broke, so that set this is the low. This high got broke, so that set this is the low right here, right? And so if we look at this, we have a change of character. So here's your low, and that change happened, right? So if we pull that back, it looks that was a high. So this low happened, we have a change of character. A lot of people look at this as for reversals, but like that's why I always say look at higher time frames. Because if you go to your 30-minute, what happened, right? You had to push up, and here's our pullback, and you pulled back into the 9, into the 20. And so when that happened, if you're watching charts in your 5-minute, if we keep going, like what do? You get your pop back up, and right there, you know, okay, as soon as that happened, all that was is a 30-minute pullback. That's all it was. So 5-minute break, change of character, 30-minute pullback. And so as if we followed that play, so we got the break of the low, right? And then we came up, we didn't break top structure, and we put in a low. So it's really that easy off VWAP. If we look at 1 minute in that same time frame, we'll have a 1 minute change of character on the way back up. And that's how, if you're following both time frames, when you see that 1 minute flip, you know, okay, now the 5-minute isn't a true reversal because your 1 minute just changed your character back up to the top side. So that's how then you can put in your head, okay, that must have been a 30-minute pullback. And so that's how I'm kind of flipping these plays and looking, because I'm constantly looking at 30 because it's my trend. So that's what you could have been looking for. Okay, 30-minute, you know, you got it. What is that? A Dragonfly Doji or whatever it is. You got your pullback, buyer stepped in, and here's your go, right? And you get back to structure high. But it's a chop day. I'm talking about that's as much structure as you can find in a day like today. But if we get back to that one spot, let's see, let's come back to here. And there's your VWAP. So now if we mark the structure on this, right, we had a low. That low is broken. So we set it high. Came down, you make a micro low. Low is broken. So you set the high and you have a change of character, right? And here's your pull down. So if we pull the fib, there's when you take the EMA, you see how this 5618, now that's on the 5-minute structure. That's why I always draw those on the 5-minute for me, like, because that's what I'm really interested. But if you want a fast entry, you take it on the 1 minute, and here's your 618. So you get your break, right? Here's your pullback into. So I don't know if y'all could see that. It was very light. But see, there's your change of character. Here's your pullback. And these are hard. Like me and Juan pretty much wait for these breaks and then the pullback again. We're hardly play in the first breakout of change of characters. I talked to him recently about that, and I didn't know he didn't play them either. And he was like, "Wait, you don't play them either?" Because we both kind of like wait for the change of character happen. We wait for that first impulse, and then we want that 50618 pullback, right? So let's see if it happened clean here. So we had a trend line break. We had to change the character. There's your breakdown, and here's your pullback, right? So if we pop a fib to there, let's make this darker. Yeah. So you see how this one broke down, Here's your breakdown. Now here's your pullback into the 6185. So for us, like this is a higher probability trade for me than taking it in here. Like, because even though the break of structure happened, like right here's your change of character, here's your breakdown, here's your first pullback. Now that first pullback pushed all the way up in here, like you could play that liquidity, but this is the break that tells me, okay, this is a 5-minute pullback. This is no longer just a change of character on 1 minute for 5 minutes. This is a larger pullback. And so this right here, break of structure to the pullback tells me, okay, now we're deeper territory than just 5 minute. Now we're probably 30-minute pullback. And for me, that's a higher probability trade than you could. There's nothing wrong with taking this. You just have to have a tighter stop. But here I can kind of nail in my stop pretty tight. Like there's liquidity sitting right here. Like we know that's sitting there. You get to pull into it, and you also have your fib. And if you go to a higher time frame, let's see. Yeah. I was thinking earlier you had some type of tweezer top or something in that. But so that's how I'm kind of working that play. One plays it slightly different. T-Mall probably plays it a lot more like Juan does. But I like the breakdown and then the pullback. And you can also take the fib from that breakdown too. And there's your pullback right there into it. But yeah, on playing today, it was a lot of choppy candles, which kind of made a trend. But it's like I got off 0 DT. My last play was actually on 2 DT or whatever it was. I didn't want to get caught in consolidation on 0 DT at towards later in the day and get 8 alive on theta. But I think isn't this pullback right? Yeah, Mickey, I think you're the one that also saw this. Like that pullback right there was just a retest of that right there.
Yeah, and like you could kind of think of that like that consolidation up top, right? Where it made
Mm-hmm.
the higher high. That
Yeah.
pulled back, that was like the fake out downwards, like the Forex guys talk about.
Yeah. Uh-huh. Yeah,
Which
it's your
I like
liquidity.
just learned about.
It's your big liquidity sweep. And so I'll show you what it is. I don't usually like go in this deep into it, but it can confuse people, but we'll keep it basic level. So if you're looking on a market structure sense, see if it's on a 5-minute chart. It'd be easier to show. I see it on a 1-minute chart easiest, but some people might not. Yeah, so it's like right here. Like if we had a high, right, and this became your low, and your high was here. Like this right here is what they call a dummy move. And it's the sweep liquidity low. And so if you look at this on the 1 minute, it's even more noticeable. Like, yeah, so you have your level here, right? Right here. And a lot of people, so a lot of pullback traders will put stops right here. So you get in, right? It goes, they pull their stop to right in here. It's what you're taught. Put stop under support, right? Well, here's your support. This now became your floor. So you put your stop here. Well, they run it up, and this push back down is liquidity sweep under that. So what they're doing is creating liquidity. So they go stop raid here. You have sell stop liquidity, and then it pushes it back up. And that's kind of what we see this on that 30-minute play. We see this a lot, right? So if we come in and draw fair market value on it, here to here, like there's your fair market value. So you get that push down, there's your floor, sweep it, and then what do? They send it right back up. And you see with that sweep, every time you see this sweep, they bring back to recollect the liquidity. So right here, so this is dummy move, and kind of here is the liquidity. And so you see sweep, recollect, and then they send it.
RB, can you turn the volume on right there on those areas? I just kind of want to see what it looks like.
Oh yeah. Sorry. Yeah.
Okay, yeah, that makes sense.
So you see, yeah, you see it a lot. This was happening a few months ago, a lot more. They kind of chilled off on it for a minute. Yeah, that's that same fib line that I was showing you in the 5 minute. I think it was this one, right? Yeah, it's like
Yeah,
right,
that
perfect.
whole impulse was perfect.
Uh-huh.
But like in the moment, I'm I'm looking at this macro and I was like, it could be a big flag, but like I'm so focused and I know like I can't be focused on the 1, 2, and 3 minute, but I'm looking at this and I was like, all right, it's gonna break down. It's gonna break down. And meanwhile, like it was literally just a perfect 50% retrace of that first impulse leg.
Well, that's your 30-minute structure. So if you look at that, that's your 30-minute structure. So there's your low, there's your high, and then you get your pullback, 30-minute pullback. I think everybody was kind of with market sentiment. The only reason I wasn't so like this is about to just sell off because I came in today saying I think they send this up. Like I still think on a grander level they're gonna send this to like 412ish and then return back to the downtrend. And so I kind of went in today thinking they were going to run it, but they didn't really.
I think I'm like still slightly getting confused between the time frames
Yeah.
and like what to obviously macro first, but then like I think I'm getting too picky between like 30 and what exactly I'm looking for on a 5, etc.
Well, I think the easiest way around that is decide what style you want to trade. Like for me, I trade 5 minute structure and I'm perfectly happy with that. Like I am perfectly okay with taking this trade right here and like, oh, let's just do this. Hold on, let me delete that. So I'm perfectly fine with saying, okay, we set a low, like here's a high, that high just broke. And we had a low right here, right? And so let me grab this high to that low. I get the pull back right here. And if we come into this area on a 1 minute chart, I'll show you what it looks like. Like I'm perfectly fine taking this entry right here and being content with this exit right here. And so for me, the 5 minute structure is fine because like we get that, right? And so I don't get too caught up in really I want to know what the 30 minutes doing because that's my okay, so let me rephrase this. Right now I am perfectly fine with taking that trade. And that's been my mindset for the last few months because the 30 minute has been a lot of range. The 30 minute hasn't really given us a trend until the last few days, right? So like if we come back on a 30 minute, like we've had massive impulsive moves, which cause massive ranges. And I've been preaching that 30-minute chart for forever. Like the liquidity sweeps, y'all remember that? Like chop, chop, chop. And that's what we did for a while. And in the last few weeks, we had kind of a trend. And so if the 30 minute is in a clear trend, and we're just talking clear trend like here, like I will play 30-minute trends. I will play 30-minute structures. And so I'll use the first 5 minutes, take half, and then I'll switch over to 30 minute and find my next target on a 30-minute structure. But in today's trading world right now, it's just not feasible. Like you're going to get chopped out. You're going to lose money to theta. Like, so for me, I would rather find a clean setup like this, hit it with size and get out here and be done. And so I don't get too caught up in it because as long as if that's my structure, right? Like my low is here, my high is up here, and we'll just delete that low because it doesn't matter right now. And all this is a retest, right? Like you have liquidity right here. We come down, retest. We have the 0.5, we have 618, and it's holding, right? The buyers stepped in and held. Like I know with market structure, the probability of getting back to the structure high is very high. And so for me, if I don't take it all here, I'm taking 3/4 to half, and my next level would be up here, right? But on chop days, I really just take all here, and then I look for a reentry. And so by doing that, as long as my 1 minute is holding true to that structure set, right? So this was the entry. You see, there's a little consolidation phase here, a little change of character, push down into the 50. Got your enter here on double bottom. And now we work up. As long as this is holding structure on the 1 minute, like that's how I would trade this. If I had time, just if I wanted to stare at charts, like I would sit here and say, okay, well, as long as this holds higher highs, higher lows, like I'm in this trade. And that's your first exit, right? Boom. Where are we at? Same structure high that I got out in the first place. And so, like, here's your high. That high got broke. Well, that's weird. There's your high. There you put in a new high, which makes this a low, right? Now we come in, we test that low. You're technically not out yet. See? Oh yeah, now you're out. So you could play it like that, but I just wouldn't get too deep into what every macro, micro. Like right now, it's a micro market, and so that's kind of how you have to trade it. And so find your time frames and stick to it. Now, if you've got to trade a bigger time frame, like you can do this on a 5 minute and stay micro on 5, right? And with the 30. But for me, I've just gotten so content, and I'm hitting my goal trading like this. I'm not really in a hurry to be like, man, I want larger trades, or like, guys, that's the thing, man. Like when you find your way of trading and you're not chasing someone else's style or chasing someone else's strategy. What we teach here, I wouldn't call style or strategy. We're teaching you fundamental basics. If you understand them, between fibs and market structure, like if you understand this, you will find your style in trading that. And for me, I'm a very quick trader. Like these last few months, like if I'm in this trade and I enter here and I'm starting to not like price action, I'll just take what I have there and be out of it and not even worry. Like, yeah, I could get out right here and then just it rip and be like, well, yeah, well, it went without me. Who cares? Like, it's just, yeah, go ahead.
So yeah, just I don't mean to chime in, but like I just wanted to say, for people that are a little bit newer as far as trading options, like is with respect to what RB is saying, it's just as far as like just playing the range and not marrying the contract or anything like that. Try not to go too far out because when we're in a range like that and you're way out of the money of your strike, you're just gonna like theta is just gonna chop you up. That's why. And if you do, you know, plan your exit very quickly. That's pretty much all I want to say.
Yeah, so guys, for me, growing and trading, what I've learned, the more like, okay, if you try to trade something and you're bouncing between different people's styles, different people's strategies, and you're just bouncing and bouncing, you're not going to be consistent, because trading has nothing to do with being right or wrong in the market. I don't know how many times y'all have heard me preach this, but it has nothing to do with being right or wrong. Like entering this trade here, like you can enter it anywhere and make money. It's all about probabilities. It's a cash system that you don't have to be right. You just have to get in at a place that gives you a higher probability of making money. And the only way to learn that is by sticking with one thing and doing it over and over and over and over again. So like for me, I wouldn't be on Twitter if it wasn't for trying to grow the compound. Because you can just get in that rut of like, oh, Blim, like I love Blim to death. Like Blim will always have a place with me because he really taught me how to trade a bear market. And like through some of his strategies, like we trade a lot different, but through his strategies, like he's the one that really taught me, dude, you've got to find yourself and you've got to take out the noise and find yourself. And then when I met Venom and Juan, like it really came to that point of like with Venom, it is purely mental. Like he doesn't give a rip. Like he's not even as big in market structure and fibs and all that as we are. Like he's straight like, I'm gonna trade psychology, and like when I see price action do this, this is what I'm gonna do. And if it doesn't work, I'm gonna cut it. And I'm gonna move on to the next place. And I see price action do this, this is what I'm gonna do. And then I'm gonna cut it. And so like you really gotta hone in in a way. Now, the reason I love market structure, because it's not a strategy. The market structure is purely just how the market moves. And if we sit here and we just look at this chart, like we had a high, right? That high was broke, put in a new high, which made this the low. That high was broke, put in a new high, made this the low. Now, that low held, right here, this low held. That was the low. The low held. It's a strong low. So now our next common sense probability thing is we're going to put in a new high. What do? We go up, put in a new high. That high was made. So now we got a new low, right? Let's just move this here. And we can keep going. And as long as these things hold true, like the only exception is when you don't make the high. Okay, now you go to assume you're in a ranged market. And so if we play through this, okay, now we broke a low. So what does that mean? Now we had to change a character. So now we can put in a lower high. There's your lower high. You break a structure. And now we're just opposite game, right? And that's how I trade. Like, I don't really look more into the market than that. Like, I'm not one to sit here and watch VIX all day long. Like, VIX is a nice signal, but for me, like, this is going to tell me what's happening. And if I'm in the right side of a trade, so like change a character, right? So there's our lower high right here. We made the lower high. Now we're going to make a new low because we trade market structure. Now, if this high right here holds and does its job, we're going to make a new low. So what am I doing? This is where I want to be entering, right? I want to be in somewhere in here because my expectation is to make this low. Now you can get in right here. It doesn't matter. If you want to break an EMA and hold, you can get in here because your expectation is to break this, right? And as long as we break this, as long as we do this, we did our job. And the market for me right now is get out right here because we've seen ranges, right? We've seen bounces on ranges. So take half here, let it make its low. As long as the market does that, we know we're going down, right? Until you're told it's not. You're going down. What did you do? Made a new high, a lower high, new low. So we keep playing through this. Okay, now what did you do? You broke your high. So now you change the character. So now we're going back up. And what do? You go back up. And the problem I've noticed a lot, guys, is when you're following a lot of different people, especially ones that teach you strategies rather than foundations. A lot of people teach strategy because it always keeps you around them. I'm gonna tell you that right now. They don't want to teach you foundations because when you learn foundations, you can trade on your own. You don't need a room, you don't need Twitter, you don't need call outs. But the moment you start playing other people's levels and other people's strategies, you become blinded to the market. And I had this happen to me recently. Like when I was learning fibs with Juan, because I like fibs. Like fibs is pretty cool to see. Like, okay, where's the highest probability area? I'm a probability trader. Well, I want to know if we put in this low here and this high here, like the highest probability point to break down is right in here. And that happens, right? You break down. There you go, set your low. But like when I was learning that, like my eyes physically started not seeing the market for what it is. And like it kind of broke me and I had to get away from it for a second and just go back to trading my structure. And I started back testing more of fibs to where they were just confluence, right? It's just probability area. And so like during the day when I draw my fibs, they look more like this. Y'all saw it when I first came in. They look more like that because I don't really want to see them all that much. I just kind of want it to be like a probability. And on day like today, I really trade like this more than anything. I don't have EMAs because they just confuse me. But like for that time, like I physically couldn't see the market. Like I felt lost. I felt blinded. And that's your mind. Your mind plays tricks on you. So when you see somebody else's levels and somebody posts a chart over the night and they do this, like, let's see. And I post charts. Y'all know this. But if we come to 30 minutes, let's just grab a little supply zone, right? And you see this right here, and they're like, "Oh, hey guys, area of interest to watch. We're gonna push down." You're into their bias and thesis at that point, and when you go trade and then nothing is happening and they're not saying anything about it, you're lost because it wasn't your idea. And so guys, the best thing you can do is go into back testing and play the market. Like go back to the first candle of the day and look at price action and draw price action and draw structure and then figure out how you trade it. And like I said, guys, it doesn't matter how you enter and exit. It really doesn't. Like you put in a low there, right? So we have a high, we have a low. We know we have a few options. Break this high, break this low, or stay in a range. And I do this all the time. Like that's how I back test. Okay, we just broke a high, right? So now our expectations come down, put in a lower high, and trend up. So boom, you could get in, right? You enter. It doesn't matter where. Our expectation is to break this right here. So we have that one. Now we come in. We have this one. We know we're going to break these highs. That's what we expect the market to do. There's your break. Did its job. Now we come down, put on the lower high. Now our expectation is to break this high, right? Did its job. And when you start looking at the market like that's when you start making money because it really doesn't matter. As long as this holds and this holds, the market's doing its job and we're going probability. Now where you get into making consistent money is saying, okay, if this is the low and this is the high, where is the highest probability place for me to enter? That's all that matters. Like I said, it doesn't matter where you enter. If it break it, it did a job. But then you get into, okay, where's the highest probability place that I can risk the least amount of money? Because if I'm entering anywhere, I'm going smaller size so I can risk coming all the way down to here. But if you have a high probability area, like say off that high, and we know this area is a high probability area, and we push down. Oh, I had it wrong. Yeah, it's getting too hard to see. But like we push down, right? Pop up. Now we can get into very tight areas to trade within. And that we know, okay, we have a very higher probability chance of pulling into this area. And so if we were to come back to here and we look at like a 2-minute chart, here's your 9, right? And we go to 3-minute chart, there's your 9. So with everything else at stake, and if that's our low and we pull a fib from the high to low, okay, so you blew through your 5 So now it's just confluence. That's all it is confluence. So you can wait for this to be retaken and go back up, or you can trade off a 9 EMA with your risk is seriously the low of this. So I want to get to the low of this. So when we come into here and we don't bounce this area and we keep pushing down, I'm going time frames up to see, okay, where's my EMAs? Because if we broke through the 1 minute 20, we're most likely getting a 3-minute 9. You break through the 3-minute 9, you're most likely getting the 5-minute 9. And so that's how I trade. And so it's just probabilities, right? Because my expectations come back up here and break that. The closer I can get risk, the higher size I can go. If I'm entering off the 5 here, I'm going smaller size because I have basically a 1-to-1 trade, right? But that's all trading is, guys. You can't overcomplicate it. And I think everybody wants to overcomplicate it. That's why a lot of times I do this right here and I hit that button. Actually, I don't hit that full button. I come here and I do this. I hit these buttons. And I'll leave my 200, I'll leave my 20 on, and my VWAP on. And I trade like this. Because really all I care about is volume right here. But these are trend signals. And then I trade market structure.
Rob, so you're getting excited when you see red candles into demand and green candles into supply.
If I'm going long, 9 times out of 10, I'm buying it on a massive, large red candle.
Dude, and like everything you're showing makes so much sense, right? Like risk to reward structure, it's perfect, right? But it's like actually getting yourself to do that. I feel like I'm gonna have to probably go back to paper or just do it a few times and force myself to buy those candles. Cause like I'm thinking in structure in real time, being like, oh, this would be like a perfect area for a red candle, but I just cannot do it yet. And then I end up waiting for like a green candle to confirm, and then that just that skews the RR by like a lot by that time.
Yeah, and it does. And everybody gets psyched out. Like you see this massive red volume, right? Like if I turn my volume off and just put it back to regular volume, it's a massive red volume. And then you get this volume that's a bigger candle on least volume. And then you get a hammer. And so for me, like sometimes you can look too much into VPA. Like it's hard to say because I'm such a VPA trader. Like I see this setup and I'm like, oh, I'm gonna hit this on VWAP. Like if this fails here at VWAP and I hit this, well, I'm gonna cut it right here. To tell you the truth, I'm probably cutting it right around here. I'm not going much lower, but like this is max pain, right? Like this is my max risk area. But like that's VWAP. Let VWAP do its job. And so what do we see on a 1 minute? We see a candle. Okay, VWAP did its job. Here's your telltale. VWAP did its job, engulfing candle. So if VWAP did its job and we're in an uptrend market, what does that tell you? Trend continuation. So like that's why I love buying into. I'm not scared of red. Like I don't know. I'm just so used to it at this point. Like to me, because I think probabilities. That's the only thing going through my head during trading is probabilities, probabilities, probabilities. Where can I get in the cheapest to make the most money, right? And then when you start adding trend lines, like you have a trend line right here. Now we have a little more confluence, right? And then you get up to here. Like now you have turn some EMAs back on, maybe. I don't know. Like now you're riding EMAs. Like just freaking hop in. Your expectation is to break this. And then if you conquer that, now if you broke this, now you got to get out of your head greed because it did its job. Market structure did its job. For all we know is this is a strong low, right? This is a higher low and it's strong because it did its job. It broke that high. So now that's done its job and we're here. Your next question is, okay, what's going to happen next? Now you could take half off here, see if you pull back down to a respectable pullback level. But in market structure, you can do this, right? We can do this. That's option 1. Here's option 2. And this is option 3. Let's do this. And then we get change the character, right? To start a downtrend. So like as we break this, my brain is automatically flipping to what's next. Like sometimes it's just easier for me to take it all here. Like if I'm having a mental day to where like I'm sluggish, like I'm exiting this trade. Like say you get in on VWAP, say you don't get in VWAP, you get in on this right here. So like you have this pullback. Actually pullback be down here, and say you get in right here, right? Like you get in on you take back over, and you get in on a fib line here. Like if I'm mentally not fully there, like I'm just taking all here. And I'm not taking all here. Like I don't ever think, oh, I just missed out on this trade because guess what, guys? If this sucker does option 1, guess what I'm doing? Give me the pullback. Did its job, right? And so I'm never out of a trade. Like, so I don't look at it as like, oh, I missed a lot of money because I exited this trade way early. It's like, dude, I just freaking get back in it. It's no big deal.
So how do you determine to get back in there? Like that pullback right there is just like it's a pretty small pullback, right?
Yes, but for me, I'm looking at liquidity.
Mm-hmm.
And so you see where it pulled back to?
Yeah. Now, I mean, you would enter that. You see the liquidity. You see that buyers come in. You get in now. But then if it just decides to keep breaking down, I mean, your options are to hold, right, or just get there and then look for another spot later, right? I mean,
Yeah. To be honest, I don't really buy these much because I'm not. I like for some reason I like deep retracements a lot more. Like I love like a 6185 retracement. Like it's just picture perfect, right?
Well, your
So
risk
like
reward's better, right? I mean, you got better risk
yeah,
reward.
yeah. So like if you drew this liquidity out, you push out and then you push in, right? Or like even down to here, you come back to get this fair market gap right here. Like there's a fair market gap sitting right here, and you come down and get it. And so like really, would I buy this? I don't know. Maybe. Let me see. Let me see what 3 minutes doing. Yeah, probably. Like, look at the VPA. It's just a little flag. Like, yeah, I'll probably buy that off then getting close to a 9. 2 minute probably touch the 9. Yeah, look at that. So yeah, I don't have a problem buying that. What the hardest thing today was, like I said, there was just like not a massive impulse move. And so like your pullbacks were kind of shallow and then it would go a little, right? Like shallow and then you get a pullback. Shallow, go a little.
So I think maybe like the whole liquidity sweep thing kind of got in my head, but so you see where like right there, yeah, where your mouse is, like those wicks above the previous high from earlier in the day. Like, to me, I'm always questioning like, was that a higher high on the 3 or 5 minute time frame, or was that just a liquidity sweep? Like, are we really going to make a higher low?
I think your next candle is your telltale. Like, if this was serious, this candle at this size would have been a lot higher volume. And so this was your knock. Some sellers answered, but the sellers exhausted themselves because you see this move down was a larger move than this on half the volume. And then you get here and you get a flash push down and then buyers rip it up quickly, right?
Yeah.
And so like if you just look at that kind of play through, like that's what you got really quickly. It's hard to see live. Sometimes you just got to trust it. But like right here, you get a push up on some volume. Here's a decent volume candle. It's sized as it should. Your next volume's kind of an anomaly candle. And then you get a small pushback. And then it go again. Like, I don't really like these pullbacks as much trading them. They're just a little higher risk, right? Because then I'm coming down to 20 maybe into this liquidity. Like, it's not my style. You could do it. There's nothing wrong with it because your expectation, like I said, is to break that high. But for me, I like better setups. And so, and guys, like me, what I've learned over at the beach was I could trade 2 trades on very small size and be done with my day. Like, so, like if it's a clean setup, I'm just gonna hit it with size and be done in one trade. But like today, I really had to kind of put some trades on. And so that's why I was looking for like this tweezer top. Got a nice move off of it. And then the one I had later in the day, I think I already deleted it.
Can you go over your definition of liquidity?
Yes. I really don't know. So when I'm trading,
Like visually on the chart.
yeah. So when I see an impulse move happen, the thing I want to know is why did it happen, right? So like right here, why did it happen? So obviously sellers came in enough to push the market, right? And then I have liquidity buyers bought it back up right here. So you get the move out, you get to come back, you get the retest collection, right? They collected this liquidity. So it's been collected. This hasn't been collected. So then we get push up, we collect it, you get pushed down, and then you get pushed back through it, right? And so when looking at liquidity, like here, like all these wick candles is liquidity, order blocks. Like it took an order block to make this stuff happen. And so like all throughout here is liquidity is collection, right? So like this here, like is collection, recollection. And so I don't really look at it more in the sense of like, I'm not always just crazy drawing zones in liquidity, but like when I am looking for an area of interest, so say like I'm looking for this high to be broke, right? Here. And we get that high broke, and then we come down and pull back into it. So after this happens, and we set a higher high, and now my expectation is to put in a higher low, now I go, okay, where might this possible happen? Well, I had a massive move off this block right here. So that's when I'll draw liquidity. Like, okay, there's a zone sitting here, right? We know there's a zone sitting here. If we go into a higher time frame, it's probably more picture perfect. Let's see. Let's go to 5 minute. Yeah. So we have a zone sitting right here. Let's look at 3 minute. That's not me taking a bath. If y'all hear that, just want to let you know. So that's kind of like where I use liquidity. And so like if I'm looking at an area of interest, like then I'll start looking around saying, okay, where's a possible potential spot, right? So now we get that move down. There it is, and into the area of interest.
Yeah, like that first example that we have that 3-minute tweezer top impulse down, right? So you draw your liquidity there. And then when it goes in there, I guess it kind of chills there. It breaks that, we get our higher high, and then that impulse off of that is way weaker. And then there's that huge buying wick. So that would have been like, just thinking in those terms of that weak impulse back down, could have been like a good bullish sign.
Yeah, right here. Yeah,
Uh
how we get to push back into it.
little earlier actually. Yeah, so that's like your first impulse. It goes down, right?
Yeah, right here.
Yep.
Yeah, and then push back into it. Yeah, and all this was like this move down here. Like, so here's your knock to see if sellers are exhausted yet. So will sell more sellers show up? Yes, they did. They create liquidity. So they push it back down, trap more, right? Send it. And so yeah, so now what created this move here is kind of eaten in here. And now it's weak. So then you get your retest. And your
Yeah, okay,
breakthrough.
because it spends a bunch of candles in that little zone.
Yeah, I'm not a huge like I said, like if I'm looking for an area, like this is kind of not clean structure. And like, but if I'm looking for an area, I do look and just say, okay, well, do we have liquidity still around? How do I trade without VIX? Because the chart tells me, man, like here's the thing, like the chart's gonna do what the chart's supposed to do. Like, yeah, because y'all look at VIX and maybe get a slight head start, but then again, I've seen SPY say screw VIX, like not long term. Like VIX will push up, and I've seen SPY, continue to make the move up. And so and then it reverses. So it's just like for me, like the chart, I'm gonna get a change of character. If VIX is going up, I'm gonna get a change of character on SPY. It's gonna happen, like even if it's reverse trend. So like I'm just not in the market right now to be in it long enough to really even care what VIX is doing. Like, yeah, if I'm back to 30-minute and I'm spending maybe an hour in the market, like I buy a position and I might have a trade going for an hour, then I'm gonna care what VIX is doing. But dude, to be honest, I don't know the last time I've held a trade more than 2 minutes. Like it just hasn't happened in a while. Like I don't think I've held a trade for 10 minutes in a long time. Especially at the beach. Like I was done by 5 minutes in the market. So it's just that's why I don't really don't really pay much attention to VIX. And I'm not sitting around looking at the market as much anymore either. Like I'm hitting my goal and I'm walking away and being happy just because the market the style of the market is right now, it'll take your gains as fast as you can get them. And as you saw it today, like there's a lot of fake outs, a lot of chop. And if you weren't seriously just scalping the market, like you could have gave money back pretty easy after making money. So like once I get that goal, I'm out. Like I'm not sitting around. I'm not greedy.
Can we go over starting like 245? It basically made a macro double top, but then went down, back up, down, back up. It like broke 1 minute chalk a bunch of times and got really confusing. But at the end of the day, it was still pretty much just a little downtrend.
Is that right here?
Yes.
Yeah. So let's get in replay. Let's actually just kind of replay. Yeah, so we had a range right here. I think I had a level. I want to hit that remove drawing so bad.
Okay.
Yep. So in 5 minutes we had a kind of a low here. So you had your change of character on 5 minute here. Yeah, in 1 minute. Change the character. So we're pushing highs. Making higher lows. Is this where you're saying that kind of double top was, like the little liquidity right there?
A little bit later, I think for you it's 3:45
Oh, okay.
your time zone. Basically where it peaked. Yeah, starting there.
Okay. Yep. So, okay. So right here, we had a high put in. That break right there made this right here structure high. So then you get a break. Here's your change of character. Here's your pullback. So your lower high right here. We'll see if this holds. We could push up and collect on this real quick. Close. Yeah, so this is what I like to see right here. So we get a high. There's your low. That low is set. So your high. That low is set. So here's your high. And then you get another change of character, right? Right here. Yeah. So yeah, this is a tough one. So you got a break. Here's your change of character. Here's your pullback to break. Then you get a push up, change of character. So for me trading this, like this is a prime example of the market, knowing the market you're in and time frame, right? So if you're trading this long, you get a break at the low, so you get your change of character. Here's the pullback. Like if you like to enter your first change of character pullbacks, like this is not a bad spot. Like you get the 9 rejection, you get the retest at the 29, rejects again. Like you could get in here to structure low. Once that structure broke, you're looking for a lower high. So as soon as that structure's broke, then we can pull a fib from down here to up here. Let's see. I was just wondering where that ended up actually pulling to. Yeah, so here's your pullback into the EMAs. You get your breakdown, like right here, sellers come in. So if you're trading this, like say you get in right here or you get in right here on the double top, you're going to play to structure, right? So you play to structure low. There's your break. There you're out. And then you get your push up. So even here, like if that's your structure low, you're looking for a lower high pullback, right? Sellers come in. This is one of these areas like you just might eat it. Like you could lose it here because like here's your high. So we know like this is your hard stop. That's your hard structure has changed high. So if you did enter right here, which is not a bad entry, like you got your push down as soon as you pulled back into the EMAs, you could have cut it here. Like if you did enter here and you got this push, like you could cut back on your entry if you didn't like price action. But a lot of times you get these few tests of price action, so it probably would not have probably just lost it somewhere in here. Trying to think if there's a reason for me not to get in that trade. Let's see what the 3-minute was doing. Yeah, so right here, why I wouldn't is because if you're looking at your 3-minute candle, you have an indecision candle and then a large push. 2-minute. Yeah, let's see, 5-minute. What is it doing? Yeah, so that's probably why I wouldn't grab that secondary entry. Is this your higher time frames? Like they're not extremely bearish. Like you're still seeing bottom wicks, although you got a large sell-off wick on tops here. You still got bottom wicks, 20 still supporting. So this goes back to, like I said, if your 1 minute is doing one thing, okay, what is the 5-minute? What does that mean on a 5-minute chart? We push, it was pullback on a 5-minute. Okay, what does that mean on a 30-minute chart? It was push and a pullback on a 30-minute chart. So there's a high possibility when you got this pullback and saw this change of character that your 5-minute was going to flip change of character also, and that was going to complete your 30-minute pullback. That's just where backtesting experience Mickey comes in. Like, it's just, that's a lot. Like, but as a new trader, like, you're probably just going to lose some money on this trade, to be honest. Like, you made a decent money here if you tried to buy this pullback, because your expectation once again is for this to hold and to go break a new low, right? So if you did buy this pullback, it's a deep retracement. So, but you just got to cut it when you're wrong. This is what
Yeah,
it is, right? You just got to cut it when you're wrong. And it's one of those, like, if you weren't looking at higher time frames and kind of had that just market sentiment feel and kind of already looking for a 30-minute pullback, you know, you're just wrong. You just got to cut it. And then what do you get? Let's see. So we break a high, right? So now we break a high. What are we looking for? We're going to look for a pullback. So let's kill this fib. We're on the 1 minute, right? Yeah. There's your pullback into liquidity. What does that fib area say? So if we pull from here, yeah. So any of these candles like are decent viable candles, and then your expectations to break that high, right? There you go. Man, whipsaw. I think I might have took one of these actually. No, I don't know. I can't remember where that third trade was of the day. It was cleaner than that though. Yeah, it's one of those because here you go again, right? Break a structure up, break a structure down. Now you have a large range.
yeah, it was pretty crazy because originally we just broke we had that double top, broke our trend line, had the 5-minute change of character. So I was thinking it'd just be like a pretty easy way down, but it was so choppy.
Yeah, it's closer to end also. I'm trying to see yeah, you had a little trend line going after that one. Yeah, a little sweep on top of it. Yeah, that was a tricky one. I'm talking about that's just one of those. This is what it is, right? If you don't like price action, this is kind of your telltale too. Like you see how your EMAs are just blowing through.
Yep.
Like the size of the candles, like there was a lot of volume.
It was like angled congestion.
Like look at the volume in that candle. Buyers kind of exhaust himself. Lower market push, back to sell off. Yeah, it is really angled congestion to be honest. And that's why like this is where I'm so glad that I really like to spot trade almost right now. Is this is a prime example of like on a 5-minute structure, what did we end up doing? So we had a low. See, this is one of those. Okay, this is a good example. Let me see if there's a way to delete this easily. So we had a low here, right? That gummit. My computer's being stupid, sorry. So we made a low down here. And then we kind of, our high was really like maybe up to here, but then you seriously almost could draw this up to here. Like it's almost a pause in the market. So in the macro sense of a 5-minute chart, like that might be your range. Coming off this range. So yeah, I'm talking about technically this was just a range. Yeah, just a big range on a 5-minute. Yeah, that was a very tricky one. Rob, are you working out, Rob? I think Rob's slinging the weights right now.
Sorry, my dogs. I didn't know I was on mute. I switched computers.
Oh, just playing. Yeah. Yeah, that's it. I'm gonna show you all this really quick and then I gotta go. I gotta go get my daughter some medicine. Let's see. This is something I've been doing. Been back testing a little bit. this will give y'all an insight to what I mean like when I back test. So let's just get rid of today. So I've been coming on the daily and playing, really just messing around with fibs. So if I turn this back on, you see how multiple fib levels here. So I've got a downtrend drawn from here to here, high here, low here. I've got an uptrend drawn from here to here, and then a downtrend drawn to here. And I've been coloring them a little different so I can kind of tell them apart. And then if we look at market open, like if we come to 5-minute chart and get zoomed in, I know it's chaos right now. Just gotta bear with me. I didn't trade this today. I did this after. Just kind of back testing a few things. If we look at market open with these fibs, it's kind of wild how these things react. All right, look at this. We get into market open, right? Let's go to 3-minute chart. Start getting your failure of the 1272. And that was that uptrend. You get your failure, push down into 618, get your push back up, push into 0.5, push down to the 1. And so if you look at this, like your green is your uptrends, right? Your red is your downtrends. And so you start filling your downtrend fibs, right? You start pushing, you start supporting your uptrend fibs. It's kind of cool just to watch how these react throughout the day. I had a lot more pulled. Yeah, look, see, there's your uptrend 5. So I had a lot more pulled. Like I basically had let me pull a few more. I'll show you what I had. So like I kind of came into COVID and I had an uptrend pulled for COVID. Let me turn my snap on. So I had one pulled for there. I already have that one pulled. Then I can come in and pull. Wait, I need a downtrend. Downtrend pulled from there. Downtrend pulled from there. And so, like, if I could ever figure out how not to break my brain with this, it would be kind of OP. So, like, throughout the day, like, you get into your red fibs and you fail, right? And then you push off the green fibs, back into your green fibs, back into the red fibs, you fail. And so this is kind of what I just been back testing with fibs to see how the levels play off. Like that was your 5. What did you do? You pushed off of it. Now you're getting 1272. You reject. Kind of cool stuff. I don't know if I'd ever trade with it, but like this is the kind of stuff I like back testing. I do this on a 1-minute chart fibs too a lot. But like just going into multiple days and looking at fib levels and retracement levels. If there was a way to like code these, like it's kind of cool. But like I the reason I've been looking into it is for like an opening day strat. So I've been kind of like looking to see, okay, if that fib right here, this one, so let's turn all of the others off. This is the fib that it kind of respected at open. Kind of just want to know what fib was that. And it was yesterday's low to basically the high. And that's the one we came into and failed off open, right? Failed off open. And then we pushed into this guy, which was this downtrend. So this downtrend here is what we pushed off of to come back up. And so that's kind of what I've been messing around with to look maybe into a morning strat. When there's not like a clear just market structure. Like today is kind of like a range, right? And luckily at opening we had an EMA pushed into 20 on the 2 was failing off of it, so that's what I traded off of at open. Yeah. Any questions before I call it?
I think the last thing regarding buying those uh counterintuitive candles, I kind of wonder if I'm still so paranoid from like small caps where if you did that, it could just keep running like for no reason.
Yeah, the thing is SPY doesn't just do that. Like what I've noticed with SPY, unless there's news, okay, if like Powell comes out and says something, or like FOMC like stuff is out, like SPY doesn't just randomly rip 5,000 points for nothing. Like that's why I don't really, nothing scares me about that. Is because SPY doesn't ever just like, unless there's news. And the
Yeah,
only
and that's
days,
like
the
an
only
experience thing on your end.
yeah, and the only days it does that, it happens in a trend. So like we'll come down, we'll do this, and then we'll bam. We'll do this, and then we'll bam. And it happens in a trend, right? So as long as you're with the trend, that's great. Give me that freaking pullback, and then just rip all that off of it. But like it never really like as long as you're buying with the trend and you're not trying to scalp. The most trouble I get in is when I'm trying to scalp reversals. So like if I was trying to grab a reversal and I thought, oh, here's a 1 minute change of character, let me grab this reversal off that 1 minute change of character, and then it runs against me. Like that's where you can get in trouble. But like if I'm with the trend and I'm trading with the trend, I hardly ever get in trouble, to be honest. And here's the beauty of trading with the trend. If you're wrong, like if you just with the trend, right, and you grab this candle here, like you just randomly grab this candle, and you're with the trend, right, and your expectations go up, set a new high, and you're wrong, like look how many times you get back to that area. Like you just somehow always find your way back to that area. So as long as you're with the trend, even when you're wrong, you're probably going to get back to that area eventually. Like I'm not saying like just keep holding in the, like if the market did this, like yeah, don't keep holding that. Like but if you're chopping and you're with the trend and you're like, I'm chopping, it's probably not a good trade, and you just get that gut sense like it's just not a good trade, just get out. You're going to get back to around your area. And so that's the beauty with SPY trading with the trend. It's a lot, your probability is a lot higher in your favor if you're with the trend. And even if it's 1 minute, like if you're trading 1 minute trend, just trade 1 minute trend and be happy with your small, right, scalps. So like you had a high, you had a low hold, you get a new high. It's like be happy with that. All right, I'm gonna call it and go get my daughter some meds.
Cool. Thanks,
I'll see you
RB.
boys later.